What if I told you the wealthiest of Nigerians don't invest the way most people think? It's not just buying land, trading crypto or forex, or chasing penny stocks. Yet they are earning millions in passive income every single month. And what if I told you they are doing it with investments so boring that most people ignore it completely? Hello my colleagues, welcome back to the channel, and if you are new here, you are absolutely welcome as well. In today's video, I'm going to pull back the curtain on exactly how wealthy Nigerians actually invest their money. We are talking real companies, real numbers, like how one firm I know earns over 60 million naira monthly from government bonds alone, and why they prioritize cash flow over capital gains. This isn't the flashy investment advice you see everywhere else. It's not exciting, but it's exactly how generational wealth gets built and preserved right here in Nigeria. Before we jump in, take a brief moment to smash that like button so YouTube can push this video to more people. Subscribe to the channel if you haven't already, and please share this video with someone who needs to see a different approach to building wealth right here in Nigeria. There's also a link in the description and pinned comments to join my WhatsApp channel where I share investment ideas, what I'm researching and looking at in the market. And without much talk, let's jump right into today's video. Let's go. The first thing to understand is how the most successful companies and individuals in Nigeria actually generate their wealth. It's not from their core business operations. For example, a company like AfriPrudential, which is listed on the Nigerian Stock Exchange, their main business is registrar services, which involves managing shareholders' records for other companies. But their core income, if you look closely at their financial statements, comes from a surprising item called interest income. This interest income comes from their deliberate strategy of taking the cash they have on hand and putting it into low risk, high yield fixed income assets. They are basically using their business idle capital to create a separate predictable stream of passive income. This is the playbook of the wealthy in Nigeria. They build a fortress of safe, reliable cash flow first, and only then do they venture into riskier high growth assets. The question is, what are these boring investments? They are the financial instruments that provide a fixed, predictable return and are often backed by a strong entity like the government. The main ones are FGN bonds. These are basically debt instruments, or let's say securities, issued by the federal government of Nigeria to raise money for various projects. When you buy an FGN bond, you are essentially lending money to the government, and in return, you get regular fixed interest payments. They are considered one of the safest investments in Nigeria because they are backed by the full faith and credit of the government. Then we have treasury bills, which is similar to FGN bond. They are also government debt instruments, but they are short term, usually with a maturity of less than 1 year, sometimes more than 1 year, but they are not as long as FGN bond. T-bills are sold at a discount and you get the full face value at maturity. The difference between what you paid and the face value is what you call your profit, or let's say your interest. Then we have commercial papers. These are short-term unsecured debt notes issued by large credit-worthy Nigerian corporations or businesses. Companies use this to meet their short-term funding needs. They are slightly riskier than government-backed securities, but often offer a higher interest rate to compensate for that risk that you are willing to take with them by loaning them that money. Next is fixed deposits. This is probably the most common fixed income asset. You simply deposit a lump sum of money with a bank for a specific fixed period and earn a higher interest rate than you would with a regular savings account. And finally, dividend stocks. Why not a fixed income asset? Dividend stocks are included in this strategy, but only after a strong cash flow base has been established. The wealthy use the consistent income from their fixed income portfolio to then acquire shares of stable dividend paying companies. This creates a secondary compounding income stream without having to rely on the stock price appreciation. The focus is on cash flow, not on the volatile price swings of the stocks that they invest in for dividends. So now that you know what the wealthy actually invest in, the next question is, why does this strategy work so well? The answer is simple. It's all about predictability and control. When you put money into FGN bonds, treasury bills, commercial papers, or fixed deposits, you know exactly what returns you are going to get and when you are going to get it. That means no guessing, no volatility, no hoping the stock price goes up tomorrow. It's also low risk. Most of these instruments are government backed or issued by highly credible institutions. In other words, your capital is far more secured compared to betting on a stock that could likely lose half of its value overnight. Another reason this works so well is planning power. Wealthy investors and companies love certainty. If you know that 50 million naira is coming in every quarter from your bond portfolio, you can confidently plan business expenses, expansion projects, or even personal investments without worrying about market swings. And finally, there is something called liquidity rotation. A lot of rich investors will place money in short-term instruments like treasury bills or commercial papers, let them mature, and then simply roll that money over into the next opportunity. This way, their capital is always working, always earning, but never locked away forever. Put all this together and you can see why this approach is the foundation of wealth preservation in Nigeria. It's safe, it's boring, and it's exactly what allows the rich to focus on growth without stressing about cash flow. Now, let me show you exactly how this works with a real example that will blow your mind. Imagine you run a successful company, let's call it Company X. By the way, guys, I've actually had calls with people and business owners who are already doing this. So instead of leaving their profits sitting in a regular bank account, earning maybe 2 to 3% interest rates, they made a brilliant move. They took their capital, about 500 million naira, and spread it across different FGM bonds in a very strategic way. But here's the genius part. They didn't just buy one bond. They bought bonds that mature at different times. So they get paid every single month from those bonds. Let me break this down simply. In January, they buy a 3-month FGM bond that is paying 18 to 19% annually. February, they buy another 3-month bond. In March, they buy another 3-month bond. Now watch what happens. In April, the January bond matures. They get their money plus their interest back. In May, the February bond matures. They get their money plus their interest. In June, the March bond matures. They get their money plus their interest. And the thing keeps rolling over for other months. But instead of spending this money, they immediately reinvest it into a new 3-month bond. This creates a never-ending cycle where money keeps flowing in every single month for them. By the way, when I say 3-month bond, I'm not saying that the bond just lasts for 3 months. What I actually mean is that bonds usually pay after every 3 months or quarterly. So they are sure that every 3 months they are going to be earning or getting their interest rates from the bonds that they invested in. Bonds usually last long, like I said earlier in this video. By the way, that's a side note. But with 500 million naira spread this way, they are earning roughly 7 to 8 million naira every month completely passively. And here's the kicker. I also know a firm that scaled this same strategy with over 4 billion naira and above. And at that level, you're talking of about almost 60 million naira cash flow every single month, like clockwork. And what do they do with that money? They don't just spend it. They invest layer 1, the safe bond income, into layer 2, which is dividend paying stocks like Dangote Cement, MTN, or BUA Food. So now they have built what I call the layered wealth investment strategy. Layer 1 is safe, predictable bond income. Then layer 2 is dividend stocks funded by their layer 1. Mind blowing, right? Then we also have layer 3, which is long-term growth, and that is compounding quietly in the background. This is how the wealthy build wealth. Safety first, then layers of growth stacked on top of that safety. Now, here is where most of us retail investors completely get it wrong. While the wealthy are busy building predictable cash flow machines, what most retail investors are doing is we are basically trying to chase the next hot stock. We are looking for that penny stock that's going to do 10x overnight. We are jumping into crypto, hoping to catch the next pump or the next bull run. Now, don't get me wrong, I'm not against growth investment, but here's the key difference. Most of us are trying to hit home runs before we have even learned how to get on base. The wealthy thinks cash flow first, capital gains second. Retail investors, we think capital gains first, cash flow second. To put it into perspective, while a firm with 500 million naira is earning 60 million naira in every month in predictable cash flow, the average Nigerian investor is refreshing their stock app every hour, stressing about whether their portfolio is up or down 5%. The good news is you don't need 500 million naira to implement the same strategy. Let's say you have 500,000 naira to invest. Instead of putting it all in one stock and praying it doubles, here's a smarter way to invest that money for cash flow. In month 1, you put in 200,000 naira into a 3-month treasury bill. In month 2, you put another 200,000 naira into a new 3-month T-bill. In month 3, you put your final 100,000 naira into a 3rd-month 3-month T-bill. Now, here's the trick. Treasury bills don't pay you interest every month. Instead, you buy them at a discount and get the full value at maturity. So, for example, if a 200,000 naira T-bill pays 15% annually, the 3-month interest is 7,500. So, instead of you paying 200,000 naira for that T-bill, you're going to buy it at a discount of 192,500 naira. Now, when it matures, the government gives you the full 200,000 naira back. The 7,500 naira difference, that was your profit that was locked in upfront. By staggering your investment from month 4 onwards, one TBO matures every single month, and just like that, you have created guaranteed monthly cash flow. With 500,000 naira spread this way, you have about 6,000 to 7,000 naira coming back every month. It's not life changing actually, but it's steady, predictable, and stress-free. Now, here's where it gets interesting. Some smart investors takes this a step further. They lock their capital into TBOs, which is safe, guaranteed, and backed by the government, and they take only the interest earned from that TBO and use that to make higher risk, higher reward bets. Maybe they will look for penny stocks or a growth company or even crypto. They are not gambling with their own money anymore. They are using the government's money, which is the interest from safe investments, to take swings at high growth opportunity. Now, if the risky bets works, that's great. That's an extra upside for them. If it doesn't, who cares? After all, it's not my main money. So their core capital is untouched and 100% safe, and that's exactly how the wealthy take risk without losing much sleep. And here's the final piece, which is compounding. Instead of just spending that 6,000 to 7,000 naira when it comes in, they roll it back into a new TBO. Now you're not just earning on your original 500,000 naira, you're earning on 500,000 naira plus all the interest it has already generated for you. And that's how you turn a trickle into a river. Over a year, you pull in over 75,000 naira from your 500k in passive income before we now start talking about compounding. But once you keep reinvesting your earnings snowballs and your money is constantly working harder for you, and you never added any single extra naira out of the pocket. This is exactly how firms turn their 60 million naira in monthly cash flow into more wealth. They have built a self-funding machine. Whether you have 500,000 naira or 500 million or even 4 billion naira, the principles is the same. Build predictable cash flow first, then use that cash flow to fund your growth, please. Most people have it backwards, chasing capital gains while ignoring cash flow. But the wealthy, they get rich through cash flow. Cash flow is king. The capital gains, that's just a cherry on the top for them. So the ultimate takeaway for this video is the strategy of the wealthy isn't a secret. It's not something you need to be a genius to understand. It's just boring, it's predictable, it's slow, and that's exactly why it works. This isn't about getting rich overnight. It's about building a foundation that will stand the test of time. A system that generates wealth quietly and consistently while you sleep. If you want to play the long game, the game of building and preserving true and generational wealth, then you have to embrace boring playbook, because in the world of money, boring builds wealth. If this video helped you think differently about money or investing, please take a moment to smash that like button so that it can reach more people who needs to see a new perspective. Also subscribe to the channel if you haven't already, and share this video with a friend or family member who you think could benefit from it. For more insights like this, join my WhatsApp channel. Link is in the description and comment section. I share investment ideas, what I'm researching and what I'm looking at in the market, all completely for free in that WhatsApp channel. And thank you so much for watching, and until next time, my Kalis, they will.